There are, of course, plenty of stocks out there, but that doesn't necessarily mean that most of them are any good. Today we're going to be looking at 3 growth-centric stocks, starting with Eli Lilly. They've performed incredibly well over the last 5 years, up 479% or so. That is a very, very good performance. And clearly they're in that growth stock category. They are a pharmaceutical company, and the pharmaceutical industry is kind of weird because it's really depending on how many wins you get. You can see a very broad array of ways they give money back to shareholders. Some do dividends like Pfizer right now. They're very low. And then there's a lot of growth stocks, Eli Lilly, and then Novo Nordisk is another example. They've just done very, very, very well. And the PE seems extreme, but you would expect that for a growth stock. But when you look at the forward PE, it's a lot less scary. 33 forward PE compared to like the S&P 500s, which is about 23. So you're paying a premium, but you're paying a premium for a stock that has just blown the S&P 500 out of the water, certainly over the last 5 years, but even past that as well. Eli Lilly is a company I would not be afraid of investing in if I was looking for a growth-centric stock, which of course you have to put the label on growth stocks. They are higher PE. Generally, they have higher growth. So as long as they keep growing at the rates they are, you're going to get very good return. If there was a recession or the company stopped growing at the rates they were, you would see a downturn just because, hey, it's going to be valued like a company that's growing like a normal company, right? And then also if there's a recession, there's just the assumption that the business will perform well. People generally go into more value-centric stocks during that time period or out of stocks entirely, and growth-centric stocks are hit harder even if the business itself isn't doing poorly. So Eli Lilly is a very good example and not one I'd be concerned about investing in. Celestica is another one. Probably most of you have not heard of them. They're a smaller company, and they're only $11.5 billion market cap, but also most of that has come within the last couple of years. Even over the last year, it's up 253%. This is a company which, even with insane growth, it's only 31 PE, and that's because it's growing so fast. And the reason the PE probably isn't any higher is just because it's a small company, and there's still that inherent risk. With smaller companies, it's easier to get away with some things. Because Apple, it's much, much harder to, let's just say an extreme example of something like accounting fraud. It's not likely to happen in any case, but it's a lot harder to get away with that with a company with, tens of thousands of employees versus one that's much smaller. So there's some inherent risk baked into smaller companies, but Celestica is one that has done very, 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 very well as of recent, up 1,113%. They do hardware, they do manufacturing, they kind of do a lot of different stuff. I don't have time to dive into all of it in this video, of course. And if you're interested in it, I would highly recommend you do some research on your own for that specifically. Forward PE also 22. So you're actually below the S&P 500 PE for a company that has dramatically outperformed the S&P 500. But like I said, it's a smaller company as well. I think they're based in Canada, although they do a lot of stuff in America as well. So with ADRs, there may be some stuff, although I'm not 100% certain with that. It, depending on your brokerage, probably also depends on where you're located. But this is a company that has done very, very well, and is definitely one you should take a look at if you're interested. Visa is the last one. You may say, it's not really a growth stock. Well, the PE would indicate it is. It's above the S&P 500 PE. Also, last 5 years hasn't been as well. If we zoom out a little bit, go back to something like late 2015, so a decade ago, they were at 67. So this is a company, the S&P 500 over the last about decade has gone up about 200%. So this company has clearly gone up more than 200% in this time frame. It has outperformed the S&P 500. Also, all of these, basically MasterCard, Visa, and American Express, all have performed very, very well. Credit cards are just used so much in America. I'd assume almost everyone watching this video uses them as well. And even if you don't, you know how much they're used. You see the ads, you see the people, you know. And all these cards, they just have consistent earnings growth year after year after year after year after year. They just do. Look at their earnings per share. Get a graph of it like the last 10 years. It is really pretty remarkable. They're some of the most consistent companies in the entire world. By consistent, I don't mean like consistently growing in the sense that it's like a crazy amount, but consistent in the way that you're getting constant revenue year after year after year after year. The only way you'd really be, the only way you'd really be concerned is if there was a massive recession or something like that. But if there is, there's plenty of other stocks that you hold that's going to be down just as much. But as long as the economy is doing okay, companies like Visa, MasterCard, American Express is a little bit on the lower PE end scale. Visa and MasterCard are a little bit above it. I love all three of these as long-term holds as companies. I think they're going to continue to perform very well. I don't think America or the world is going to give up credit cards anytime soon. So that's what I got. Let's look a little bit at the forward PE, which is a little bit below again. Yeah, 28, indicating growing company, all that sort of stuff. So anyways, I appreciate all of you for watching. If you enjoyed, I appreciate if you left a like or subscribe. I do daily stock content on this channel, everything from deeper dives into companies to compilation videos like this. I appreciate all of you for watching, and I'll catch you next time.